Hey, I'm Bill Fanter, founder of Options Action, and you're watching the Weekly Watchlist. If you'd like to get access to this content before it goes live on YouTube, just hit the first link in the description to sign up for our free weekly emails. All right, let's jump right in. Hey, welcome back, everybody. And this is going to be the final watch list of 2025. So, for all those of you that have stuck with me throughout the year, I am forever eternal grateful. So, let's get to it. This week is obviously the week of New Year's. So, volume is still going to be exceptionally low. Okay, so keep that in mind. When it comes to economic data, we really don't have anything. Monday, pending home sales, we do know that there is more inventory on the market than there are buyers. Rationalization for that is pretty simple. Interest rates are still too darn high. So 30-year fixed rate mortgages, 6.5%, 6.75%. Jumbo mortgages, 7.25%. And even though the Federal Reserve keeps lowering the shorter duration interest rate on the curve, that has nothing to do with mortgage rates. So they could keep lowering the shorter end of the curve, and mortgage rates are going to stay exactly where they're at. Okay, mortgage rates are driven off of the bond market. And so that's one thing you're going to want to consider as to how do bond prices react going into 2026. So on Tuesday, we have the Case-Shiller Home Price Index, the Chicago Barometer PMI, and then most importantly, minutes from the December FOMC meeting. So why are the minutes important? Well, what analysts are looking for is what could they infer that maybe was written but was not discussed at the actual last December meeting where Jerome Powell took questions. Okay, so I highly advise that when the meeting minutes come out, don't be in a trade. Now, Wednesday, we have jobless claims. This is going to be New Year's Eve. Thursday, the market is closed for New Year's Day. Then Friday, January 2nd. Nothing's going on, right? It'll probably be pretty darn quiet. So I would not expect normal trading volumes to resume on January 2nd, okay? Again, fund managers, people in corporate America are taking another long weekend. Thursday, Friday, Saturday, Sunday, Monday. They will be back the very first week of January, and then we will see how things respond from that point forward. Let's take a look at the individual names. So here we do have clearly a run-up over the last 1, 2, 3, 4, 5 days, right? Going into Christmas and then New Year's, where the market, SPY, is making new all-time highs. Now, the one thing you want to look at this volume, right? Normal average volume in the market is probably, right around this point here. So we held volume, leading up to the week before Christmas. Then the week of Christmas, volume just dropped exponentially. And if you tried to trade the market, you probably saw that with your options premiums, where you're like, wow, I'm getting a green candle, I'm getting a red candle, but premiums aren't doing anything. Well, they're not doing anything because there's not enough people at the auction to bid up prices, okay? So this was our prior last all-time high, which was in October. We got a decent sell down, which was really nice and really needed, and then the recovery. And then again, another drawdown and another run to new all-time highs. Now, my anticipation is in 2026, you are going to see more volatility. You're going to see more swings of the ups and the downs and the back and the forth, okay, which is good for us option traders. So just note, and I'm going to go to a lower time frame here on a 15-minute. You can see that we are now kind of just trading within these channels here, and you'll want to just be very cognizant of them, right? We got this 691 that's going to be our top. We definitely pulled back, holding 689.70, 689.25, and I know these price levels are very close to one another, but again, you're going to get that when we were trading at all-time highs. Let's look at QQQ, which is not at all-time highs, meaning technology is lagging the broader market. So the broader market, why SPY is making new all-time highs is because of retail, airlines, banks are making all-time highs, right? But what's not making new all-time highs is Microsoft, Nvidia, AMD, Apple, right? It's the tech stocks that have had a pullback, and now they are a slow grind higher. So I really do like these price levels, 623.54 for a bounce, heading back up to 625. Now, what we will need to see is SPY still making higher highs. Okay, so if SPY pulls back, then QQQ most likely is going to go lower. So when we play options, we play the stronger of the two. Stronger is going to be SPY. If we're going to play puts, we're going to play the weaker of the two. QQQ. Let's stick with tech stock names. I don't want to trade the banks. They're at all-time highs. More risk than reward, if you ask me. Commodities, all-time highs, gold, silver, platinum, uranium. You can definitely, try to take a position, but what's happening is that the volume is so low, I would more like a correction for them to come in than for you to chase the market higher. So you can see with Apple here, we're kind of between these price levels, 271 and 275, and these are more interim levels, right? Now, these were built on this, prior 2-week time frame. Why is that? Again, because volume is dropping. I mean, we're not getting a tremendous amount of volume like we were getting earlier in the year. So do keep an eye on these levels. I think they're decent to trade amongst Amazon. And again, if we don't have the follow through, right, Amazon bumping up against this 232.98, we needed to break, hold to go higher, okay? If not, and we get a pullback, I would like this one for a put. But we are at a level of inflection that we can trade off of a really good price level. Microsoft did gain some momentum over the last couple of days, but we are exactly at the same place that we've been stuck for the last several sessions, right? 487.75. Okay, you can see that all the way back down here on Thursday, December 18th. We'll push forward to Monday the 22nd. We'll push all the way here to Wednesday the 24th, right? Microsoft really isn't doing anything by moving $5. $5 on a 500% stock is nothing, right? It's moving 0.10%. Really, really hard to trade, okay? You need a price movement of typically 0.25%. Let's take a look at Google. Google, again, had a decent sell down, nice recovery. We are between price levels. I can't say that I would really do anything right now at this 313 level. If we get a pullback to 309, definitely consider going long, or 319, see if this holds to go back up to 328. But kind of like what I said before, right, is that the broader market is making new all-time highs, but the tech stocks are not. Tesla got a bit of a pullback, okay, pushing into this all-time high back here on Monday, December 25th, almost the $500 notional conceptual place, but watch and see if they hold this 473.82, which is going to be this break of structure right here from December 26th, right, day after Christmas. And if it doesn't hold, then 466.50, but I do like this for a bounce, right? You can see where they pretty much bounced it here on Monday, the open, Tuesday the 16th, come back here on Wednesday the 17th, right? This 466 is a real solid level that I think you could trade Tesla off of. Let's look at Meta. Another one just kind of struggling like Microsoft. It's been back and forth, right? It did break its, channel low, so we are now starting to at least trend back upwards. Let's take a look at this one on a 4-hour time frame, right? 9 is above the 21. We are trending up. It hit the low back down here at 582. Clearly oversold. We're almost $80 higher. We do have a gap fill up above, right? But they really need to get some momentum going. I don't think you're going to see that probably until maybe earnings come back around the first week of February. So just watch here for consolidation. And then after earnings, possibly a move higher into this gap fill up above. Let's go ahead and take a look at Nvidia. Nvidia actually caught a bid over the last couple of days, right? It was, hovering down here at this 171 on Wednesday, and then literally has just taken off, right? Really good uptrend, a lot of good relative strength, good increased volume, okay? Now, the last week of Christmas, not as much, but overall, they were buying this thing up. So keep an eye on this 188 level. Love to see it come back down here, retest, and continue the trend higher. Now, AMD, unfortunately, has been the laggard. I did take a call trade on this last Monday. It was a small position, like $120 or something, and it was kind of going to be a zero or hero, right? And I took it literally right at this 214 level going up into 225. No push, no follow through, no momentum, just consolidation. Now, this would be considered bullish consolidation because directionally, where did we come from? We came from lower to move higher. So definitely keep an eye on AMD. I think this one could break out back to some higher highs and could make for a good options trade. Let's take a look at Palantir. Palantir hit the top of the gap fill, now kind of rolling over 187. I really like calls better down here at 184. If you could get a deeper pullback to 181, but do watch the overall directional trend of the market. The one thing with this, obviously, we're going to be touching the 21 on a 4-hour time frame. So 187 looks like a good place that this thing could bounce and then continue its directional bias higher. So always zoom out to the higher time frame to say, should I be looking for an uptrend entry or should I be looking for a downtrend? Well, right now, Palantir should still be an uptrend entry until we get this 9 and this 21 crossing to the downside on a higher time frame. Okay, let's take a look at Oracle, and I'm sticking with the same names as last week because they have enough alpha and enough volatility for you to actually get some market movement, not great market movement, but some market movement with low volume. Okay, so we're holding this 198, break into the upside. We're clearly in the channel, 191. If we could get above this, go for the gap fill up above. And then Broadcom. Broadcom has had a nice recovery from its last earnings. You can see where it is literally bounced off the top of the gap fill down here at 320. We're up at 355. Watch for this to hold, break above to go higher. If not, if tech has some weakness and they sell into tech, taking profits before year end, put a little dressing on portfolio, this could be a good one to the downside because we do have this open gap down below. And then let's take a look at Bitcoin. This has not been performing well, needless to say, on a reoccurring basis, just overall weakness, right? We really want to see Bitcoin lose this 87,000 level, head down to 86. And if we could get below 86, definitely 83, we lose 83, then we're in the 70s. And that's really what I'd like to see this do over the next couple of weeks, okay? So silver, new all-time highs. Gold, new all-time highs. SPY, new all-time highs. Bitcoin, nothing. Okay, so I think this is probably getting a little bit concerning for some investors, but we'll see how this one plays out. And then we'll take a look at Robinhood. This has been a good proxy, again, to play against Bitcoin if you want to trade this one. We are at a price level 117, right? This is where I do like this, and even possibly a buy and hold accumulation to eventually head up to 200. And then MicroStrategy, MSTR, is going to be the other proxy play for Bitcoin. Again, this one looks pretty much primed for a bounce here at 155. But if we lose 155 and Bitcoin starts to dump, this thing is definitely heading lower. And how low can it go? Probably down to 100, right? I think we get back down here into, 120, 100 range. I mean, this company is just a farce, if you ask me, right? Where the entire strategy is hedged on Bitcoin. But I'm not going to throw any more shade, but their business model, I think it sucks. But that's just me personally, right? All risk, but potentially a ton of reward. But if the reward doesn't come, then you just imploded your own company and have wiped out shareholders. So think about the bag holders, that were buying this at $450 a share, and we're now trading at $158. I mean, seriously, you lost 70%, 80% of your overall value on Bitcoin going to $250,000, $500,000. Again, nothing wrong with having a piece of your strategy in it, but it can't be your entire strategy, people. So with that, that's going to be the final watch list of 2025. I'm super excited for next year. We have so many great things going on within the Discord community that I can't wait to share them with you. So with that, everybody, Happy New Year, and I will see you very shortly. Take care. Thanks for watching. If you haven't already done so, Make sure you sign up for the free weekly watch list emails to get early access before the video drops here on YouTube. See you next time.